Here we are in Rome. This is a conversation between European and Chinese business leaders. Zhang was here. Zhang, when you and I were doing other things and had other things on our minds at 25, I imagine, she was already starting up a venture capital fund, and she's now based in Silicon Valley and spends her time investing in early stage technology startup companies. While she's been here, I had an opportunity to catch up with her and just talk about some of these issues that the markets are clearly having to confront. And on this specific issue of the China-US trade spat, the one big concern that she had was how it may impact the startup community in Silicon Valley, given the high preponderance of overseas CEOs and entrepreneurs that are currently driving America's tech industry. So let's just hear what she said about the risks.
People worry more about perception instead of the real, regulation process. Because if there's a regulation, there's a filing. If there's a requirement, VC just do it. So it's not a complication for following the instruction. But the problem is for perception. Because for many years, the reason Silicon Valley has been the hub for the innovation is because it's a such diverse community. And for the unicorn we have on the market right now, more than 50% of the founder or co-founder, they're immigrant. So if we start to have this type of a little bit anti-immigrant, anti-international image and map it with the Silicon Valley, it kind of discourage for lots of the immigrant founder to work on their company in the Silicon Valley. So I feel that's a part, no matter from the technical founder side or from the technical venture capital side, that we do want to still be able to promote the culture of the Silicon Valley. Although we have the regulation, although we have the spelling that may requires more manpower to work on it, but make sure that all the top talents still are willing to come to Silicon Valley to work on their company.
And just pointing out the potential unintended consequences, therefore, for America's tech sector if people are deterred from moving their businesses into the United States. I also asked her about valuations, Steve, and you were pointing out earlier on in the program, we've seen $140 billion wiped off the value of FANG stocks in that overnight rout. What does that mean then for the reset across the VC sector? Well, she admitted that we are seeing valuations across the board in the technology space coming down. But I have to say she wasn't overly concerned about the early stage segment for her, but clearly she feels that some kind of reset in values may actually be a healthy outcome. Let's just hear the clip.
We have 85 unicorn companies in 2015. Way too many to have consider how much capital under the market size. It's also because we had too much capital in the VC and companies are overvalued. And they're not really having a sustainable business model yet, but giving us such high valuation. And they got stuck there. That's also the reason now we have a very interesting term. We call unicorn, called decade unicorn. The unicorn has been there for more than 10 years. Why they're not exit? Because they're overvalued. And they know once they were listed on the public market, the market gonna give them a fair price. And now, after several years, we also have this huge passion about tech innovation that's also contributed to this high valuation of the public market, especially for tech sector. So I think now we gradually have this reset of the value, or maybe market correction gradually is a good sign. It's like in Silicon Valley, we always worry about earthquake. Having some small earthquake is always a good thing instead of having a big earthquake without any alert in advance.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.